Hello everybody, Brad here again with another YouTube video. I know it's been a little bit of time since my last one, just been super busy with other things, but I wanted to do something a little different here today. Instead of going over my own trades, things like that, I just wanted to talk about US dollar CAD because it's definitely been a pretty interesting topic for all of January. So I just kind of wanted to touch on all the different opportunities, things that you could have done to get involved. So I think what's happening with a lot of people is they have this fear of missing out mentality because they truly don't fully appreciate the amount of opportunity that actually exists in the market. So let's just jump in. So basically what I have here is just the monthly chart just to kind of understand essentially the framework that we've been working in for the last quite some time till 2007. Essentially, we're just kind of ranging in this overall impulse correction, looking for a large move to the downside. Whether that happens or not remains to be seen. But let's just keep dropping down and continue on. So basically, as this is no surprise to anyone, this is something that we've been looking at quite exclusively for quite some time. We just have this impulse correction, and essentially now we're looking for that momentum move to the to break this ascending channel and ultimately break the higher time frame. And what we're noticing is it's replicating this pattern almost identically from a weekly perspective. Once we jump into the daily, it just becomes a little bit more clear when we compare the two structures. Let me just clean that up a little bit. So essentially, yeah, like I said, it's pretty much just replicating this move here. We have correction, correction, nice impulsive move with very small correction. So that's kind of what we've been forecasting at this point. So if we just keep jumping in, the lower down we go, we can kind of see all these opportunities that kind of existed. So if we're looking at the 4-hour perspective, the initial drop, we had this large ascending channel. Price just struggled to break this high, lots of high test candles, shows a lot of rejection. Great entry point here, nice impulsive move to the downside. And then what we start to see is another basically continuation pattern of both bear flag, so impulse, correction, impulse to the downside, and what we'll notice is just it forms another ascending channel within that, so it definitely increases the probability of that move. So we drop into the hourly. This is where the fun really begins, so to speak. So we'll start at the very beginning here. So essentially, if we're looking at this saying, hey, how do you get involved at the top, essentially? And basically what you're seeing here is this ascending channel, price becomes very corrective, struggling to break these highs. Pretty much any sell would have been valid here. You could have sold on this retracement candle. 25 pips stop probably would have been more than fine, or even 30 if you wanted to be conservative. Chances are you probably would have got stopped out for break even, but what you'll see is there's another kind of valid sell here, another one here, another one here. So lots of opportunity to get involved from that perspective. And it just really showcases that, if you miss that first move, there's always another move, to take note of. So, this is a pretty good example. Not the cleanest flag, but definitely a flag to continue down. So you got this impulsive break, a little bit of a correction here to continue down to the downside. And then once we get into this larger correction here, this is where things get a little bit interesting. So essentially what we're looking at is a pretty big correction. And this was no surprise to us. We knew with such an impulsive move to the downside, a larger correction was bound to happen. So if you did get caught in this wondering what was going on, it's just to take a step back and really understand, when things fall as quickly as they fall, they're going to need to take time to correct, develop a little bit more liquidity before the higher time frame commits again. And essentially what you see here, again, is just price struggling to really clearly impulsively break the highs. And one thing I also wanted to just really quickly go over as well, because I had some questions about this structure, is essentially like, where should I put my trend lines, things like that. So essentially, if I just delete this real quick. So when you were initially looking at it, you probably would have had something drawn like this. And as price begins to move to the upside, you go, oh, okay, we've broken up. But what you'll notice is each time we've slightly broken this ascending channel, prices impulse back into the pattern. So what we can just do is basically evolve our trend line and nothing has changed. The whole pattern itself hasn't been compromised. Did see some people with it drawn like this. This, in my opinion, is where the lack of clarity begins, because you say, oh, well, we got an impulsive break. Here's a correction, another another kind of impulse to the upside. So basically, we're continuing up. So we should be looking for buys. But if you kind of look at this overall structure, it's not incredibly clean, and something that is, I think, key to note in this case, and I think really should take some note on, is the fact that the most recent two touches would be essentially these two spots initially. Um, we like to keep things incredibly recent in terms of the patterns that we're doing. We're evolving with the market, making sure that we're on top of what's going on. So what we see is, a touch here, and then as we see here, it's a breakup, but it's coming back down, and price is pretty corrective as it approaches that. It's not, impulsive like this piece here. So, it's always something to ask yourself, how is price breaking these areas? So essentially, if we just evolve that, nothing has really changed. If we just keep walking this forward, we've broken slightly, not really. Get a nice reaction there. So again, we can just evolve, because really the pattern has not been compromised in any way, shape, or form. And just as we kind of keep noting, price is now starting to move to the downside, getting a little corrective, get an impulsive move to the upside. Again, here we have another break. Price is kind of basically just correcting here. I put an array line here just to show the previous high as an example of kind of things to look out for. And basically what you'll notice is just price just keeps trickling. So at this point, again, pattern hasn't been compromised. We can just evolve essentially, because nothing has changed even in the slightest. And it's pretty much that's kind of the cadence you want to have with this. If it impulsively breaks structure or significantly alters the structure, then you can start asking yourself, does this still make sense? We can take things one step further as well, and essentially just draw in these new touches here. So essentially we have one touch down here, a second here, and then we want to get kind of our outer. Now this is kind of an interesting one. You could do something like that, or something more like this. This, in this situation, because price is a little sloppy, it really isn't the best way of doing it, but I'm kind of seeing this as a really awkward expanding pattern, so I've chosen to basically set it up like this, because this was a pretty significant rejection point, lots of high tests, nice move down. This was corrective, and then we've seen this somewhat impulsive move to the upside, so that's why I've kept it like that. And essentially, yeah, if you just keep walking price forward, again, previous high, we get that rejection. That's where we see a nice commitment here. You could essentially enter at these spots if you wanted to. If you entered on this retrace candle, chances are you probably would have been tagged out for break even, depending how you manage the position, of course. This one as well, you start to see it develop. You could have been tagged out for break even again, and it's really just understanding the nature of the markets, knowing that it's not going to be these picture perfect moves all the time. So let me just back out of this real quick. And so yeah, you'll see in the hourly we get a nice flag. So you kind of keep this high as in the back of your mind as price advances to it, because we did get a bull flag. But the key thing to note here, and this is something that's so important when you're analyzing charts and stuff, is to ask yourself, how did we break the pattern? So if I were to take this back here, essentially, we see that we have this overall impulsive move to the upside, and then it starts to correct in the form of a bull flag. Essentially, we're hitting this double bottom here, so we'd be looking at, or a third touch, get a little bit of an override in terms of this low test retracement candle, but we'd basically be expecting something like that. We got a third touch here, so looking for a good sell, but knowing that there's this high here. So we just kind of keep moving this forward. We'll see we get a little bit of an impulsive break right off the gate, but it's really what happens here. Price just begins to be super corrective, really low momentum. It's just trickling to the upside. We get this really strong impulsive candle, but then it retraces after the next candle. So you could use that as a reason for entry. Again, if you're forecasting to get this third touch or a reaction of this high, that could be a chance you miss that trade, but no problem, because what you can also kind of start to notice as well on the 15 minutes is we have this overall ascending channel. And then you could look to basically trade the break. You have the impulse, the flag, and yeah, it just keeps going down. So it's just one of those things you really have to be careful and really notice what the market's telling you. There's so many opportunities to get involved, so never get that fear of missing out, and just keep a level head as you're approaching the markets. There's so much opportunity to capitalize on.